Hi, this is Optimus Futures, and we're here to bring a new series of videos here for our viewers where we introduce and explain the Overbought IO or the OBIO indicator that we have very carefully and meticulously developed to help the average trader understand and analyze market action, live market action, a lot better. This first video in the series will be outlining the major indicators that make up the OBIO and how they work in tandem to give the trader a better understanding of the market and outline special areas of interest in the market that can create opportunities for the trader to enter or exit the market and just have a better understanding of where the market is headed and where the market momentum is tipping towards. So without further delay, let's get straight into it. You'll see that I have a bunch of indicators pulled up here, all of which form extremely important components of the Overbought IO method or group of indicators, and we'll be going into detail and describe each one of these indicators as we go further into the video. I'm using the MetaTrader 4 demo account platform here, and the market that I've pulled up here is the S&P 500 1-hour chart for the futures market. I would like to draw your attention first of all to this small box here tucked away to the top left corner of your chart. This is going to be the trend information box. As the name suggests, this box will display very valuable information relating to the trends and the momentum on the different time frames. We understand the need for a lot of technical traders, or majority of technical traders, to incorporate a multi-time frame analysis into their trading for better and more improved trading decisions. We understand that a trader who's trading the lower time frames would frequently want to jump to the higher time frames to see what's going on in terms of market sentiment, in terms of trend and momentum, to be able to align their trades and their trading decisions better with the more longer term trend. We also understand that traders who are on the higher time frames, like the daily or the weekly time frame, also like to incorporate lower time frame analysis into their trading and see what's going on at that precise moment in time when they're trying to either enter the market or exit the market, to be able to time their entries or exits better. And taking that need into account, we've developed this indicator over here that you can see is divided into 3 sections over here. Each section will give you unique information about or what's going on basically across the different time frames. The first section of this box here is more of a volatility indicator, while the following 2 sections, the second and the third section here, are more directional cues of where the market is currently headed. So as I look at the first section here, we have the daily, the 4-hour, and the 1-hour range. The daily range, for example, at 36.62% tells me that the market on average moves 36.62% compared to the previous day's close on any given typical trading day. The second section here indicates the trend on the daily, the 4-hour, and the 1-hour. The daily trend at 1.95% plus 1.95% basically implies that the market is currently trading, as of right now, 1.94% higher relative to the close on the previous day. The third section here is the CTF, which stands for current time frame momentum, and HDF, which stands for higher time frame momentum. As you can see, the current time frame momentum, you see a red fade, which basically means that the bearish momentum here is sort of fading. As you can see, we do have the market sort of in a downtrend here, or rather I should say a pullback phase, where we do have a couple of red colored candlesticks, but it's nothing too threatening, should I say, relative to the strong looking uptrend over here. So it's bearish momentum, but it's sort of fading. And the higher time frame momentum I see shows at a trend, and it's green, which basically means that we have a bullish trend in place on the higher time frame. So without having to actually switch to the daily time frame or the weekly time frame, you can actually just stay on the 1-hour time frame that you're looking at right now and still know that the trend on the higher time frames is bullish. So this is where the trend information box comes in very, very handy, and it allows for you to look at the volatility and the directional bias that the market is taking across a spectrum of time frames that traders usually use and reference in their own day-to-day analysis and to basically make trading decisions. Okay, so now that we're done explaining the trend information box, we move on to the next indicator that you see on the screen, down at the bottom of the screen actually, and that will be the momentum shift indicator. You will see that there's a zero line drawn at the middle of this window, the indicator window, and this will be a very, very important tipping point for the market, as you'll see quite often. So for example, if I look at this situation right here where the market tipped off from a bearish rhythm back into a very strong looking bullish momentum, this was also the point where the histogram, the momentum shift histogram, sort of moved from being below the zero line to above the zero line. And so for example, looking at another situation here, so for example over here you can see that once again we had fading bearish momentum. As you can see, the size of these bearish bars started to grow smaller and smaller as the histogram moved closer towards the zero line, and then it just popped right above the zero line over here. And if you coincide that with the actual price action, you'll see this is also the tipping point where we had all this bullish activity come into the market over here. So whenever price actually, or whenever the bars here, you see them tipping away from either above or below the zero line, this is going to be a very good indication of the market potentially changing momentum or changing gears or changing the market rhythm there. Of course, during periods of consolidation where the market isn't very decisive, such as right over here, you will see the histogram, momentum shift histogram, being all over the place, with quite a few small little bars being above the zero line and occasionally bars being below the zero line, again indicating that the market is more or less indecisive and it may not be a great time for you to be taking a trade. Of course, we will go into detail about how these indicators actually help you take high probability trade setups when combined with other factors, and how these indicators can actually help you keep away from riskier, less probable trading conditions as well in future versions of the videos. For now, we're just explaining and giving you the basics of the indicators and just helping you understand what these indicators are for. That said, you will also notice that where the bars are actually above the zero line, you will not see a consistent green. You'll see a very pale whitish green over here, then a lime green, and then a dark green. Again, these are just varying intensities of the bullish momentum that the momentum shift indicator is actually able to pluck right out of live price action. You can see that as, for example, right over here where the momentum tipped in favor of the bulls, you'll just see some really pale looking bars towards above the zero line, and that really just indicates that the market only just tipped its momentum towards the bullish side, and it's not really taken a strong gear just yet. But that sort of starts changing straight away as you continue to see more and more bullish candlesticks print on the price chart. The color on these bars, as well as the size of these bars, starts to change and gets darker and more intense as the trend actually matures and you're looking at strong looking bullish candlesticks. The same is true with situations where the market is actually where the histogram is actually below the zero line. You'll see that we have again white lines, small white lines indicating very weak bearish momentum, and then you'll see plain red lines that indicate definitely relatively increased bearish momentum, and then you'll see maroon lines and bars here on the histogram that would indicate significant bearish momentum building up. So that would really be the momentum shift in a nutshell and what it does. We will see in future videos how you can actually compare the tops and the bottoms or the swing points on the price chart relative to the swing points on the momentum shift indicator, and actually also use it as a very, very effective tool for divergence as well. Again, more on that later in future versions of the videos. Okay, so now that we've looked at the indicators that are sitting in separate windows on our MetaTrader 4 screen, we now turn our attention to the indicators that are actually applied on the price chart itself. I'm of course talking about the dots that you see here and the moving averages or bands that you see applied on the chart over here. So these indicators will actually be or have the most direct implication in your day-to-day analysis and in trying to understand what the market is doing or why the market is doing what it is doing. you will note that the market tends to stay within these two zones of bands that we've drawn here for the most part. Occasionally you'll find the market sort of spiking beyond these zones, but that is usually not a very common occurrence. And for the most part, you will see that the market tends to stay within these zones or bands that we've drawn over here. These do in some way resemble your conventional Bollinger Bands that you may or may not be aware of, but is a very, very common technical indicator that a lot of traders use. And again, it is an indicator that is popularly and commonly used to indicate shifts in momentum in the market and situations where the market may actually be gearing towards a breakout play. But again, where these bands sort of differ from your conventional Bollinger Bands is the way that they're made up, and the back-end algorithms and the math that goes behind these bands is made or done to ensure that this indicator is actually more responsive and it does a better job at reacting to actual and real-time price movements. So that's it. Let's actually get into the details of these bands and how they work. You'll see that they're actually made up of 5 moving averages. You have 2 green colored moving averages that will run pretty close to each other and will be placed underneath the price action for the most part. And you'll have 2 red moving averages that will typically run above your price action. And these, the red ones will actually represent overbought trading conditions. So anytime that price is actually near these bands or is touching them, these are going to be the situations where the market is going to be entering into overbought conditions potentially. When the market is actually just touching the lower overbought band, you're looking at a situation that may not be as urgently moving towards a potential turnaround. Whereas when the market is actually touching the outer band, the outer overbought band, or the red moving average that is actually the farthest away from price action, that is where the market is actually headed or is actually trading in extremely overbought trading conditions. The same or vice versa would be true for when price is actually touching the green bands that are situated down under over here. Whenever price is actually near or is touching the first of these moving averages here, these will imply oversold conditions. Whereas when the market is actually touching the second moving average that is further down, that will be the situation where the market could potentially be entering extremely oversold conditions. And so therefore is going to be a situation where you would potentially want to look for a reversal trade maybe, or if you're in a short trade, that is going to be the moment where you would want to probably take precautionary measures and anticipate the market sort of going back up. You will also see that there is a middle band that is running sort of midway between the overbought and the oversold bands over here. The middle band really does not have any direct implication in helping you understand why the market is doing what it's doing or whether the market is actually shifting momentum, because you'll see that it is for the most part sort of tied up with price action, a little too tight to give you any kind of realistic information about the actual momentum. But as we will see in future versions of the videos, the middle band actually plays a very, very important role to allow you to fine-tune your trade entries and be able to time your entries and exits in general a lot better. Because usually when the market is actually consistently above your middle band break, above your middle band, it is usually a good sign that the bullish momentum is intact and the market should generally be trading higher and hitting newer, higher price levels. On the other hand, where the market is consistently below your middle band, such as in this situation, it is usually a good indication that the market is in a bearish trend and is looking to trade at lower price levels in the near future. So that really is the only direct implication that you can extract from the middle band. but as you'll see, it actually has a very important role in allowing you to time your entries a lot better if you do plan to use the OBIO as a major component of your trading method or your trading system, and are looking to take trades that are validated by OBIO into your trading. Okay, so now we look at the final component of the Overbought IO indicator, and that is going to be these dots that you see appear most frequently around the overbought or the oversold channels. Pretty much like all the other indicators that we've talked about so far, these dots are also just a measure of trading conditions and whether the market could potentially be entering or nearing an overbought or oversold trading condition. You may have noticed by now that we actually also have them colored differently on different occasions. You'll either find them colored yellow, or you'll find them colored orange, or you'll find them colored red. Again, these are just varying intensities of the indicator telling you with how oversold or how overbought the market appears to be. And again, when they're clustered together, it's usually a better indicator or better signal, I should say, compared to when they appear by themselves. Again, a yellow dot in itself may not be as strong of a signal of overbought or oversold trading conditions as would be an orange dot. And a red dot will actually be an even better signal compared to the orange dot that the market could potentially be trading in an overbought or oversold trading condition. Of course, when it gets clustered with other colored yellow dots or the same colored dots, it just sort of adds more and more weight to that particular instance in the market, allowing you to make more informed trading decisions. It is no coincidence at all that you see these dots appear for the most part when the market's actually trading at or near these outer red or green bands. As mentioned, these are an indication of where the market could potentially be entering or trading in overbought or oversold trading conditions. And since these bands, these outer bands themselves, are a representation of the same situation, there's no coincidence at all or no surprise at all why these yellow, orange, or red dots appear when the market's actually trading near these outer bands. So that essentially wraps up our introduction of all the different components of the Overbought IO indicator. Again, to sum up, we have the trend information box over here that presents information about the trend and the momentum and the range that you have currently going on across different time frames, reducing or eliminating the need for the trader to actually keep switching between time frames. We have the momentum shift indicator down here that we talked about earlier in the video, and how you have these different shades of green and red on the momentum shift indicator itself that actually gives you an indication that the market could be either potentially turning around or situations where the market is heavily bullish or bearish. We also talked about these bands that appear to be similar to Bollinger Bands but are actually more responsive to price and give you more information about where the market could potentially be trading in overbought or oversold trading conditions. And finally, we talked about the yellow, orange, and red dots that usually appear in situations where the market is trading around these bands and just act as an added measure and an added confirmation that the market could potentially be trading into overbought and oversold trading conditions. So all these indicators, when working in tandem, actually present very valuable information to the trader about interesting situations in the market and situations where the market could actually be either heading towards overbought or oversold trading territories, which is usually a good location where traders will be looking for either breakout plays or reversal plays, or in general just look for high probability trade setups. In our future version of videos explaining the OBIO, we will be going into detail about how all these indicators work in tandem and how they work with other more conventional aspects of technical analysis to actually help you build a more solid foundation of understanding price action and understanding what price is doing at any given moment in time and why it's doing what it's doing. We will see you soon in our next installment of this video series.